we'll be the only free cash flow generating royalty company that is actually generating free cash flow from revenues from mining operations.
Talking silver here today with Silver Crown Royalties and Peter. It's been a great year. You've just had pre-IPO financing in October. You've announced a royalty deal with Pilar just in November. And now you're looking for listing options. And Stein, what are the options for a company looking to get listed on the stock market?
Yeah, sure. Let's keep it simple for the retail investor at home. First, we have an IPO, initial public offering. This is quite expensive. You have to go through broker house, but the goal is to raise money when you go public. Then we have a direct listing where you just directly list to the stock exchange with the current shares outstanding. This one is a bit cheaper and you don't really raise capital by going public, but you are a publicly traded company and the owners of the company can sell the shares. And then the third option you have is a reverse merger, where you already have a shell company on a stock exchange and basically the private company merges into that shell company to become public afterwards, and the capital is raised through this option, and it's one of the cheaper options out there. Now, Peter, you are planning to go public in 2024. What are the current details on that?
So exactly like you were explaining, Stein, we are contemplating all three approaches, and there's a secret fourth one where the merged company that you mentioned, well, we can just create one ourselves and then put Silver Crown Royalties into it. There are certain conflicts around that would have to be resolved, but nonetheless, that would arguably be the fourth option. In order of preference, we've always wanted to direct list, and that's why we always wanted to focus the company as a free cash flow generating entity that wouldn't need to raise any money on the IPO because we would be self-sufficient. And the requirement there for the TSXV in Canada is you only need $100,000 in working capital, have positive free cash flow, and you can direct list. The fees are a little less than would be if you're doing an IPO and you're doing a raise as well as a listing, which would be our second choice. And the second choice and the third choice, the merger or RTO, reverse takeover that you mentioned, that one is kind of similar to an IPO to us. You still need a broker, you need somebody to sponsor the transaction in a way, and it becomes a little bit more costly. There's now more legal involved, and it might take a little bit longer. But all these options are on the table. We've had discussions with certain shells out there. Regardless, we still continue to progress towards a direct listing. So all options on the table. If a shell comes up, it's got a lot of cash in it, we'd be very happy to advance discussions with them.
All right, that sounds really good, Peter. And what are the current timeframes that an investor at home might expect for this listing process?
So we've been saying all year in 23 that we would go public in the first half of 2024, or at least try to, or aim for that timeframe. And that hasn't changed. We still feel that that is very much doable, especially if one of these RTO vehicles does present itself, and perhaps one already has. If we are able to move that down the line, we certainly are tracking Q2 of next year as a very distinct possibility. Now, never say never. There might be some slippage. So, of course, that time frame could shift. But as of right now, and at least through January, we're still fairly comfortable that we can hit Q2 of next year.
And Peter, if you were a junior mining company, my next question would normally be, okay, what's your cutoff rate and what silver price do you need in your business case? Do you also have a threshold that if silver would drop to $18 dramatically overnight, that you would cancel those plans for 2024?
No, we don't. We're self-sufficient anywhere above $10 silver, but that's on deals that we do when it comes to structuring capital deployment. We don't have any costs really to speak of internally other than obviously a few salaries, and that's pretty much it. Legal costs count against costs of making deals, as do various other due diligence costs. So if we don't do any more deals, we don't spend any more money. So with free cash flow, which we should have after we crystallize the pipeline, we become self-sufficient, and at that point, silver could go to zero. Yeah, our revenue would go to zero. What is the break even? It is around $10 US or Canadian, depending on how aggressive or how conservative you wish to be.
Yeah, and I mean, you just mentioned revenue flow. You have two projects right now that are generating a revenue or are going to generate revenue. Is there already an outlook of how much that's going to be in 2024?
Yeah, it's going to be contractually at a minimum the equivalent of 10,000 silver ounces. So in Canadian dollar terms, it's about $330,000, maybe $350,000. That's based on the deals that we have already signed, and both of them are paying as we speak. One of them, we got 2 checks from them so far this year, and for Q24, we're going to get 2 checks, one from Pilar, the other one from Gold Mountain. That's going to be sometime in January or early February. We have a number of other transactions that we've inked that are lined up. One of them is for another project in Brazil. That one will be retroactively paying to January 1st of next year. That's a restart, so it's probably not going to be for the full quarter, but nonetheless, there should be some additional ounces even beyond the 2 projects that I just mentioned coming in Q1. And then depending depending on how successful we are in raising the next $2.5 million, there can be another project behind that as well, which could see our revenues quadruple from current levels into next year.
Okay, and two numbers to put that into perspective. So $350,000 in revenue. What are your G&A, your overhead costs that you expect for 2024? And what is the market cap that you're expecting for the listing, so that we have a bit of correlation here?
These are good questions, but always something that's at the back of my mind. I think that company-wide, we shouldn't be spending more than $1 million all in. So in terms of free cash flow generation, it should, we should be able to get somewhere between $300,000 to $500,000 in free cash flow. When it comes to multiples that one would look at in terms of valuing the company, this becomes a bit of a challenge, because the way that it's generally done, at least in the analyst industry where I spent a lot of time, is you look at comparable companies. The issue with Silver Crown Royalties is that we'll be the only free cash flow generating royalty company that is actually generating free cash flow from revenues from mining operations, as opposed to from investment income or various other, not necessarily royalties, but advanced payments on royalties and various derivatives. So that puts us in a little bit of a different position, one, and two, the amount of free cash flow, believe it or not, will actually be relatively high in the nano-cap royalty space. Again, if we do close and if we do achieve our targets, is that going to be in a way valued the same? So there's no price to free cash flow multiple for nano-cap companies because they don't generate any. So they trade on price to NAV and they trade on price to sales. Arguably, price to sales is not a bad multiple to use, because once you clear your overall internal cost hurdle, the revenue is free cash flow, right? If you're doing 30 million in revenue and your internal company cost is $1 million, your free cash flow is 29 million. So royalty companies, because they have no additional overhead based on additional revenue dollars coming in the door, that really becomes store key to free cash flow. Again, revenue goes up 100%, your free cash flow should go up 100% once you're covering your minimum cost base. So the companies out there that do trade, that have revenues, trade between 20 and 30 times revenue. So if we are at $1 million in revenue, and that's 30 times, that's 30 million Canadian. If we have 1.5, that's 45 million.
For the viewers at home, we just got a masterclass on valuations in the nanocap space. I don't think this is necessarily the direction our name meant, but it's definitely really interesting, Peter. Thank you for explanation. Basically, you're telling us that there's no comparable to compare to on the valuation side in the nanocap space, in the royalty space. So you need to look for companies that aren't profitable, that aren't cash flow generating, and then you start looking at the price to sale multiple like you explained. Peter, I just have one quick final question before we end this segment. How can people at home actually invest in your free cash flow generating project? And what is the hurdle for a retail investor to participate in Silver Crown Royalties?
There's no hurdle at all. That just comes down to whatever fees you will be paying if you're filling out a subscription agreement. And the way to invest is simply to reach out, info@silvercrownroyalties.com. There's a way to invest through our website as well. There's a request for additional information. We're happy to send out the subscription agreement and help you fill it out and take it from there.